Everybody's talking about the Santa Claus Rally. Of course, it is the holiday season. But is the market ready to deliver gifts? Stay tuned. We'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, help us get to 1,000 subs. We're so close. If you find this video of value and are looking for a different opinion, that of Wall Street and Big TV, we would appreciate it. First up, I'm going to talk about risk management, a big part of what I do. I have a little bit of a chart here, and I'm looking at it. What we see is obviously 80%, the big chunk, 10 and 10. Think of it this way. As a wealth manager, my goal, when I look down here, if I'm buying a stock or an index or whatever the case might be, I'm going to miss that in most circumstances. Nobody knows the bottom. But hopefully, based on our process, utilizing the charts, we're able to capture that upside. Now, the issue is, right now, the same thing stands on the downside. So here we are. We hit our all-time highs. We were down 10%. You don't know when the tops are. So our goal is to hopefully get close to that, but then to look at this, the 80% on the downside, and avoid that. Hopefully that makes sense. Let's go to the big charts. All right, first up, let's go to our daily chart, our short-term view. What has happened after the big non-event this weekend? Well, there was a lot of enthusiasm with the markets. We have pulled back. Normally, I do these the day before. We're about 1% right now on Monday after this weekend's meeting. But most importantly, look right here. So the good news is we've come above the 200-day moving average for the first time in a while. But we're still stuck in this box. So what next? When I look at this, here it is. There's two things I'm looking for. Can we break out of the box 28.15? If we go above 28.15, or most recent high, then I will look to add additional equities. Now next up, same thing, daily view, just a little more statistics. Not going to do a lot here. But the main thing is, take a look, right? Here's our death cross. Oh boy, that is really setting up. Again, despite what happened this weekend, we are definitely heading towards a cross unless we have a big short-term surge. So right now, signals, I'm going to say neutral with a negative bias. Next up, we're going to have our weekly chart, which is our midterm view. What do we see here? Anything changed from last week? A little bit. Here's momentum down here, and you can see how it's bottomed out. Good sign, but still a negative crossover. That's a problem. The other thing is you can see that trend line on a weekly chart. Very definitive from 15-16, our last meaningful correction. And until we get above that, I consider this still negative. So looking at our midterm view is still negative as of today. How about the long-term view? Let's take a look at the monthly chart. What do we see, if anything? Well, I mean, last week, right, when we closed out the month, I talked about this on Tuesday Top Charts. We broke through here, and you can kind of see it right there, on our trend line from 09. Not a good thing, but as I said, what matters most is month-end close. Now, we did close above it, but look, maybe you can see it here. I'll have Andrew zoom in. We had a negative crossover on momentum on a monthly chart. Have not seen one of those. I'd have to go back here quite a bit here. Really have not seen a negative crossover since 15-16, so that is a concern. I mean, if we have that death cross on the short term, monthly as well, that's going to be a problem. So where are we? We are still in a bullish trend line, no doubt. As of today, this is just a correction within the long-term bullish trend. How about NASDAQ? A lot of talk about this right now. NASDAQ has had a big breakout today. Definitely doing better, a little bit better than the S&P, up 1 1/4. But we've already had, look there, there's your death cross. I said it was coming. We got it. Now, you look for confirmation at the end of this week. Let's see what happens here because, again, I mean, NASDAQ is technology, right? Primarily. So a couple things that look good. We're pointing up down here, right? We broke above our 50-day there, but we still have that death cross. Can the fangs bring us back to life? All right, next up, let's talk about market breadth, market strength, and then get into international. First up, been showing this chart for a while. New highs minus new lows in the market. We've talked about this, and obviously you can see it still looks pretty weak. So that tells you where the strength is. Now, we had a little bit of surge last week. We'll see. We've been here before. Not convinced quite yet. Next up, we have the 200-day moving average. Those companies where price is above or below their average over 200 days, which gives you obviously a longer view, and we're still seeing a lot of weakness here. That's why that death cross is becoming more prevalent. You see S&P just 49%. Same thing, you need to be above 60 to be bullish, below 40 for bearish. NASDAQ 100 is 50, mids at 39 and smalls at 38. So seeing a lot of weakness here overall. Next up, let's talk about international. All right, so on the international, here I have the EFA index. Pretty simple to see here. We've talked about this one in the past. There's your death cross, and believe me, you'll see in one of my tweets. Europe is having a lot of issues. Germany really getting crushed. So continue to have concerns, and you're down 17% almost year to date from our highs over here. So that continues to be a concern. Next up, we have the emerging markets area. So the BRICS, Brazil, Russia, India, China, etc. Combined, same thing. What do you see? Death cross, straight down, lower lows, does not look good. Had a bounce last night, about 2.6%. Kind of surprising. We'll see what happens by end of week. But continues to be very weak overall. And obviously, you're not seeing the whole world economy come together. And then so we look at our signals once again. When you see this, 0 of 11 U.S. equities are in an uptrend. So as a group, we are in a downtrend. Not a good thing. International, just 3 of 53 in an uptrend. So again, we're in a downtrend. Our signals are short term, again, neutral with a negative bias, negative midterm, long term. We continue to stay positive, but for how much longer, I don't know. Next up, tweets of the week. Northman Trader, great follow. We have a link below as well. Imagine a real downturn emerges. The ECB, by insisting on negative rates and QE, yes, they are still doing quantitative easing over there. Draghi has really dragged his feet here. They're going to have virtually no ammunition left to respond. If you click on the link, you will see the chart that comes with it, and it's not pretty. Next up, Jesse Felder, put him out all the time. Great follow. October 3/2/18. Okay, October 3rd. It basically says Fed fund rates. This is Powell. We may go past neutral, but we're a long way from neutral at this point. Fast forward to last week. Fund rate is just below the broad range of estimates of level that would be neutral for the economy. Holy Janet Yellen. He's flip-flopping all over the place. That really does concern me. David Rosenberg, So the Dow pops 354 points after Powell. Add up all those days in 2018, 21,000 points. The last time that we had that, you ready? 2008 and 2000. Both were bear markets. Next up, everyone's favorite, what keeps me up at night? What keeps me up at night? Trust me, lots of things, but look at this list, and it is getting longer. All the things with the Fed over here, corporate debt, political, geopolitical. Hello last weekend. What happened there? Really nothing. And a lot of issues over here with peaks. That's what I'm going to focus on today. First up, existing home sales. What's happened here? Peak and heading down. Next up, who do we have? Unemployment going down. Uh-oh. Can you see it? I'll make sure that Andrew goes in here. Peak and going back up. That's an issue. But here's the other thing. Put this chart together this weekend, and you can see unemployment peak where it goes down and goes back up. Look at that. Double top in 08, double top right now with peak unemployment. Going to continue to watch that one. Very interesting. Durable goods down 6.7. Big number being down. The economy is slowing, folks. I've been saying this. That's why the market is struggling. It has nothing to do with tariffs or any of that. The market is slowing. It's peaking. It's starting to roll over. Be prepared. Next up, let's get into bonds real quick. 10 minus 2 yield spread. 10-year Treasury minus 2-year. And when you look at it, you can see we are down to 0.21, one of the lowest reads of the year. Really got to be careful here. And this is even after last week, we broke 3% on the 10-year. So why is this important? To remind you, quite simply, it is a leading indicator for a recession. If you go back to the past here, you can see it. When we invert means going below 0. You can see it within 6 months, recession starts. We invert, recession starts. We invert, recession starts. That's what these are. These areas right here are recessions. That's why I continue to watch that. So I've been talking about, are we seeing a shift in the market? Are there opportunities? Week ago, Thursday, I added some of those things I've been talking about, staples, utilities, and healthcare. Here's a quick look at healthcare. You can see set up nicely and has gone up. Not quite at all-time highs. We'll see what happens when we get there, but continues to look good. And also added, like I said, consumer staples and utilities, not performing quite as well, but still both up in what's been a very volatile time. So next we're going to get to fear and greed with our new toy. Here it is, 22, up from 9, but still considered in a negative area at 22, extreme fear. Below you can click, I'll show you how we come up with those numbers. Wrapping it up, short-term neutral with a negative bias, mid-term negative, and long-term is still positive. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.